Hey everyone, welcome back to Corporate Decoder, the place where we break down the boring stuff and find the juicy bits. And today we're diving into Liberty Global's latest financial report. And let me tell you, there are some big numbers and surprising moves we need to unpack, so buckle up. All right, let's jump right into the heart of it, the financial tables. We need to see how Liberty Global is actually doing. First up, their balance sheet. Think of this as a snapshot of what the company owns and owes at a specific time. What pops out immediately is the massive jump in total assets. They've gone from about $25 billion at the end of 2024 to over $27.1 billion by June 2025. That's a solid increase, mostly driven by changes in things like investments, property, and especially their goodwill. Goodwill is basically the extra value a company is or valuing their existing customer base much higher. Now let's look at their income statement, which tells us about their performance over a period. Revenue has seen a pretty big jump, going from about $2.1 billion in the first half of 2024. That's a good 13.5% increase, which sounds great. But the story gets a bit more complex when you look at the details. Some of that growth comes from them buying more of Formula E, a Formula One-like racing series, and also from providing services to Sunrise after they spun it off. But here's the crucial part. When you strip away these one-off events and currency exchange rate changes, their core business, what they call organic revenue, actually decreased by 1.2%. That means the money coming in from their regular operations in Europe is slightly down. And when you look at their costs, especially programming and other direct costs, they also went up significantly. For example, revenue jumped nearly 20% in the first quarter of 2025 compared to last year, but their costs in this area jumped almost 39%. That's a big chunk of growth eaten up by expenses. Now let's talk about equity, which is essentially what the owners of the company have in it. Their accumulated earnings took a nosedive from over $12.2 billion at the end of 2025. This is a massive drop. They also saw other comprehensive earnings, which are gains or losses not from core operations, swing wildly from a negative $57 million to a positive $4.1 billion. This makes the overall equity picture a bit chaotic. $1 billion. This makes the overall equity picture a bit chaotic to read. Let's check out their cash flow statement. This shows us how much cash is actually flowing in and out of the business. For the first half of 2025, they generated about $278 million in operating cash flow, which is down from $345 million in the same period last year. It's still positive, but a decline is something to watch. Investing activities show where they're putting their money. Here, they used nearly $247 million in the first half of 2025, a big change from generating over $567 million in the first half of 2024. This big swing is mainly because they sold off some investments in 2024, like their stake in All3 Media and other investments, which brought in a lot of cash then. In 2025, they're spending more on things like property and equipment, which is necessary for growth, but uses up cash. Financing activities usually involve debt and stock. Liberty Global used about $941 million for financing in the first half of 2025, which is less than the nearly 470 and files. So they're borrowing less and buying back less stock. Now let's look at some of the interesting footnotes that give us more detail. Remember that Formula E acquisition we talked about? It happened in October 2024, increasing their ownership to over 65%. This acquisition contributed quite a bit to their revenue growth in 2025, adding over $114 million in the first quarter alone. However, it also means they're now fully responsible for Formula E's costs, which are impacting their programming and other direct costs of services. They also completed a spin-off of their Sunrise entities in November 2024. This move is aimed at streamlining the company, but it means those Sunrise operations are now separate and no longer part of Liberty Global's results. They are still providing services to Sunrise though, which brought in over 10 an as a trade bought in over an a and Welgamo on 1 million in revenue. In the first half of 2025, let's check out their investments. They have significant stakes in companies like the VMO2 JV and VodafoneZiggo JV. Their investment in VMO2 JV alone is valued at nearly $7 billion. However, their share of results from these joint ventures, meaning their portion of the profits or losses has been a big drag, with the VMO2 JV contributing a loss of over 1 million. In just the first quarter of 2025, this really impacts their overall earnings. Liberty Global uses derivative instruments, which are like financial contracts used to manage risks, often related to currency or interest rates. These can cause big swings in their reported earnings, as seen in the negative 460 and dwarsig in Cifars and EAD. Debt is a big part of Liberty Global's story. They have about $9.8 billion in debt spread across different entities. The weighted average interest rate on their debt is around 4.9%, but with various financing costs and derivative impacts, their overall borrowing cost is lower. They have a significant amount of debt maturing in the coming years, especially with their Telenet and VM Island operations. They also have considerable obligations from leases, both operating and finance leases for things like network equipment and real estate. These lease liabilities add up to over $860 million. Their tax situation is also interesting. They've seen a huge swing in their tax benefit or expense. For the first half of 2025, they reported a tax benefit of about $69 million. But this is partly due to accounting rules and differences in tax rates across the countries they operate in. The difference between their actual tax rate and the Bermuda statutory rate, which is now 15%, is quite large, mainly due to non-deductible foreign exchange losses. Looking at the bottom line, their earnings from continuing operations paints a concern in 25. They reported a loss of nearly $2.8 billion. For the first 6 months, the loss was over $4 billion. This is a massive loss, largely driven by those non-operating items like currency losses and derivative impacts we touched on earlier. However, they also report something called adjusted EBITDA, which is a measure they use to show the performance of their core business, stripping out a lot of those volatile or non-cash items. Total consolidated adjusted EBITDA was around $335 million for the first quarter of 2025, which is actually up from last year. This shows that while their reported earnings are negative, the underlying operations might be doing better, though the organic revenue decline still hints at some core business challenges. Now, taking a step back and looking at Liberty Global as a whole. On one hand, the company is making strategic moves like acquiring Formula E and providing services to its spun-off entities, and its core operations, excluding currency and major deals, aren't growing and slightly shrinking. The massive losses in their reported earnings are concerning, and the wild swings in other comprehensive income tell a story of financial complexity. Their debt levels are significant, and while they seem to be managing it for now, any downturn could put pressure on them. The strong performance of their core entities like Telenet in terms of revenue growth is a positive, but it's being overshadowed by losses in other areas and the sheer volatility from currency and financial instruments. They are relying heavily on these external factors and acquisitions to boost headline numbers, while their organic business shows signs of strain. It seems like they're in a period of transformation, but the immediate financial picture is quite mixed, with significant underlying challenges masked by accounting and strategic maneuvers. What do you think about Liberty Global's latest report? Are these strategic moves and financial complexities a sign of future growth or a cause for concern? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and don't forget to subscribe for more corporate deep dives. Also, come join our Discord community linked in the description for more discussions and to connect with other viewers. Thanks for watching, and I'll see you in the next video.